In this video we are gonna explain the most interesting 7 price action signals that actually work on the market, a step-by-step guide for your complete understanding. Subscribe if you are new to this channel. So today, we will show you how to identify these patterns on the chart and the psychology behind them and how to use them. 1. The inside bar confirmation. Here, we are in a ranging market where the price has been trapped in a box, then it breaks and closes above the resistance level, indicating that the buyers have overcome the sellers and the market can continue pushing upwards. How can we ensure this break is valid and not a failed breakout or manipulation? Because the market can easily get back into the range and continue pushing downwards. One of the ways to validate the break is to wait for a pullback and rejection to indicate that this level will hold, but the problem is that this pullback may never come and we can lose a great trading opportunity to go long. So this is where the inside bar confirmation comes in. This inside bar consists of 2 candlesticks. The first is called the mother candle, which is big and large, and the second is smaller and located inside the mother. The inside bar formation indicates a period of indecision in the market. A bullish trend reflects that the bulls are not buying further. In case of bearish trend, sellers are not in control of the market anymore. Well, if an inside bar forms after breaking a market structure, it shows a temporary indecision in the market, and if the price breaks this pattern to the upside, it shows the sellers are trying to push the market back inside the range and they failed. So, it is another confirmation that this breakout is valid and the price has a higher chance to continue pushing upwards. Here, in this chart, the market has rejected this resistance level thrice, and then the market breaks and makes an inside bar candlestick pattern showing that sellers are trying to push the price below the level again.
Recommended broker is Longhorn FX. It's an ECN broker dedicated to delivering a superior trading experience to traders.
So, if the market breaks the highest point of the mother candle, it signals that the buyers are in control and this break is valid. So, there is a higher chance for the price to continue pushing upward. Number 2, fake out. A fake out or a failed breakout occurs when the price breaks through a structure level, but immediately gets back into the range. Imagine we are in an uptrend and the market breaks through a resistance level. So if the market returns to this area, resistance becomes support and we expect rejection, but if the market breaks right through, it's a fake out, and it indicates a significant momentum on the opposite side of the direction and signals a possible direction change. Here, on this chart, the price has recently broken below the support level, so we expect this area to act as resistance and reject the price to the downside. But this resistance fails and the price gets back into the range, which shows buying momentum and pressure. So we expect the price to continue pushing to the upwards. On this chart, we have a fake out, but the interesting point about this fake out is that it occurred after mitigating a higher timeframe demand area, so this is a double confirmation that the short-term downtrend is over and we might witness a reversal, but remember, always be patient. If the trade does not align with your trading plan, you can always pass it. So, let's move on to the next, but before we continue, if you like us to make more videos more often, don't forget to support us with your likes and comments. Number 3, double top and double bottom. A double top or bottom is a M-shaped reversal pattern that price action traders are widely using. Whenever a double top forms on the chart, it simply shows that the price failed to create a new higher high, possibly due to various reasons like momentum loss, market structure shift, tapping into higher timeframe key level. And more conservative way to trade this pattern is that, wait for the price to break the neckline to confirm the reversal, so wait for the price to pull back to the neckline and look for candlestick rejections to enter the trade. This is the way we treat double top and double bottom pattern with 618 Fibonacci retracement. We will put the retracement from the start of the move to the end and place a sell limit order precisely at the 618 retracement. How do you know this is the end of the move? The answer is that we will never know. Every time you place the retracement tool but the market decides to dive deeper, you should adjust the tool with the latest move waiting for a pullback. Remember, if we don't get a pullback and the price reaches our target, there is no point in looking for trade anymore. Same concept applies to the double bottom scenario. Price rejects a level twice and complete the pattern by breaking above the neckline. We use Fibonacci retracement tool and place a buy limit at 618 retracement level, and stops will be below the swing low, and we will target the next level of market structure. Here, on this chart, we have a major level of market structure that is recently acting as a support and resistance, multiple times. Now we would like to see that market enters the supply area, and then we will look for a double top reversal pattern to enter a short position. Now let's zoom into the lower time frame. Here, we can see that the market has made a double top breaking the neckline to the downside, so we put the retracement tool from the start of the move to the end, and place a sell limit at 618 retracement level. We will target the next level of the market structure. Number 4. Shrinking candles. Shrinking candles refers to a situation in which the candle's body is getting smaller and smaller before reaching a supply or demand zone. Here on this chart, price came up and reversed, giving us a key level of resistance. Notice how the candle's body gets smaller as the price approaches this level. The psychology behind the shrinking candles is that it shows the loss of momentum from the buyers, which result in a smaller distance pushed by the price. It is an early signal that buyers are losing control and price might reverse from the area. Note this pattern works best when accompanied by another reversal pattern like a doji candle or long wick rejection at the end. Remember, the same concept is valid for the bearish scenario. Number 5. Momentum candlestick pattern. The momentum candlestick is a pattern that consists of two consecutive candles in which the body of the second one is larger than the first. And the psychology behind this pattern is that it shows a heavy momentum entering the market, which signals a continuation in the same direction. Remember that this pattern works best with the larger candle that has no wick on the top, indicating that the buyers were pushing till the last minute of the candlestick. Always consider it as a trading opportunity when this pattern aligns with the market trend. Here on this chart, these are the momentum candlestick patterns on the chart. Now notice how the price rises after this candlestick patterns forms. These signals are not enough to place trades based on them. By combining these concepts will help create a well-confirmed trading strategy. Number 6. Rising and falling wedge pattern. A wedge pattern is a period of consolidation where the price forms a condensing structure that could be identified with two trend lines. It shows us that the market does not have a clear direction, and buyers and sellers are fighting to take control. That's why breaking above or below the trend lines shows which side is taking control. Breaking above the falling wedge in an uptrend indicates continuation to the upside. Similarly, breaking below a rising wedge when we are in a downtrend indicates the price tends to continue to the downside. But the question is, when exactly we should take the trade? Because sometimes these breaks could be a fake out and the price gets back inside the range. Now here is how we approach this trading opportunity. In the bullish scenario, first we need to break and close above the falling trend line and previous market structure. This rule confirms that the market has enough momentum to push to the upside. After this break we will look for entry reasons and open up a buy position. Once again, entry reason could be various price action signals. You could wait for the price to return to the trend line area and look for rejection or candlestick reversal patterns. Here on this chart, we have a bearish directional bias. We can identify this wedge pattern, which shows a period of indecision in the market. Then the market breaks to the downside, signaling that the sellers has taken control. Also we have a break and close below the previous market structure, which is the second confirmation. Now let's apply the retracement tool and place sell orders precisely on the 618 Fibonacci level. Number 7. Combining high-quality signals. The best trading setups are the ones where multiple high-quality signals confirm each other. providing a reliable indication of market direction and potential movements. This example is where a high-quality trade setup occurs. So let's break down the price action signals we have individually. First, this clear moving down trend is continuously making lower lows and lower highs, which indicates a downtrend. Second, we have a key level of market structure that recently rejected the price multiple times. Third, we have shrinking candles as the price approaches the key level showing momentum loss. Fourth, the market made a double top pattern showing a possible reversal. Fifth, we have a doji candlestick pattern at the area of multiple confluence showing the reactions to the area. So let's check out the list of all the great factors in our favor for the short trade setup. So, this is a high-quality opportunity, so, here's an important point: waiting for high-quality trade and ignoring the low-quality ones is an important skill you must develop. So guys, I hope this video has some value for you. If it had, please smash the like button to show your support and subscribe if you are new. See you in the next video.